JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 8th of February 2021. So yep, welcome everyone guys. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always guys, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now, yeah guys, I hope you can hear me and see me well. I am finally doing my videos again, once again from my usual spot. So yep, I hope this will stay like this. So fingers crossed, of course, but yeah, as long as you can hear me, see me guys, that's, well, see my screen of course, then yep, that's all fine. So before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts. Now, quick update here on Nikkei 225. So the index popped nicely to the upside here and managed to overcome the January high, which was around the 28,980 zone. Now this is what I talked about previously guys last week. Was saying that in a way, if you want to aim for some higher levels, well, we need that pop, and yep, this is exactly what we got. It's currently aiming, the index is currently aiming for that 29,000, that my other target, 29,519 zone, which is the low of 1990 guys. So let's see if we can reach that area. For now, that's what I'm going to be aiming for. We're not far from there, of course, but yeah, let's go step by step slowly on this one, and then we'll take it from there. But for now, everything's looking quite positive. Now, slightly different story here. Well, actually not different, but slightly less bullish, but still on the positive side. The situation here on the Shanghai Composite. So the index managed to climb above this 21-day EMA again, and the most important, it managed to stay above it. So not only, of course, to mention the fact that it's still trading above this upside support line drawn from the low of the 19th of March. So for now, basically, long story short, yes, as long as that upside line remains intact, there is still a good chance for this index to drift higher. If you want to be a little bit more on the safe side, what you could do is keep your eyes on the high of last week here. And yep, that's where it will be quite interesting to see if we can actually see a further push here above this 3,544 zone. If we do see a nice good break above it, then yes, wonderful. Higher levels could be met. This will confirm a forthcoming higher high, and more buyers could join in. But at the moment, guys, yes, we are still on the positive side. However, if you want to be a little bit more on the safe side, wait for that break here above this 3,544 zone. Excuse me. Now, jumping into German DAX here, as you can see, last week the index failed to, let's say, break above the all-time high, which was around the 14,131 zone. However, the index remained just slightly below that hurdle, so in a way there is still a chance for this index to move higher. And if we look at the cash index right now, we can see that the price is already trading above this 14,131 zone. So in a way, this kind of means that, well, I mean, there is a good chance for a further move higher. Let's see if that happens. For now, that's what I'm going to be looking at here. Looking at and aiming for here. I'm going to be aiming for those higher levels. And especially if the price stays above this 14,131 zone, which is the highest point of January and also the previous all-time high. If in case the price suddenly falls back below it, well, I'll take a bit of a careful and maybe neutral approach here. However, if it starts dropping somewhere below this little hurdle right here, the 13,866 zone marked by the low of the 3rd of February. Now that's where it could become very, very interesting for the sellers again, at least in the short run. And well, I mean, further declines, some further declines could be possible, but at the moment, guys, everything's leaning a little bit more towards the upside. And yep, let's see how all this is going to play out here for the bulls. But as I said, as long as the index remains above the 14,131 zone, yep, there is a good chance for this one to push further north. DXY, another index, but this one's a dollar index. However, you can see that on Friday it took a beating, and this is what I've mentioned to you guys. On Friday morning, basically that. Basically for the dollar index is kind of lately acting as more of a safe haven. So in a way, when we get a slightly better kind of data from the US, we kind of see the dollar kind of declining a little bit here. And for example, last week, although the non-farm payrolls missed the forecast by just 1K, still it was in the positive side, and it's still kind of it was well above the previous number. Also, the unemployment, U.S. unemployment, improved significantly. So in a way, we saw the equities kind of pushing a little bit higher. However, the dollar kind of reversed back down. But from the technical side here, still keep your eyes on this upside support line drawn from the low of the 6th of January. So in a way, if it continues to provide support, we could see a nice rebound and a push higher. But if this gets broken and we see the suddenly the price falling back below the downside line as well, well, I mean, the downside could be back on the table, guys. At the moment, the downside is considered only as a little temporary correction. So let's see how this is going to play out. Now, gold. Okay, gold is very, very interesting because last week I talked about it, and if you remember, last week I talked about this one, and basically what I was saying, that if it drops below the 1819 zone, somewhere around here, then yes, further declines are possible. And it did that, and it drifted lower, and it found support near the 1785 zone, from where you can see it reversed back to the upside and pushed higher, pushed back to this 1819 zone. Now, however, what I said to you before at the end of the week, last week, that in a way we could see this little move higher here, but if it struggles to overcome the 1819 zone, this could be seen as a temporary correction before another possible leg of selling. So that's why for now we will keep an eye on this barrier here. If it continues to provide resistance, then yep, another slide here could be possible. So keep that in mind. If it eventually actually climbs back above the 1819 zone, all this territory right here up until the downside line will be somewhat of a neutral one for me, because again, for me, preferably I would like to see a push somewhere above the 1875 territory in order to start looking at some higher levels. Jumping into WTI oil very quickly. So the commodity managed to reach my other target, the 57.40 zone, and I talked about that level. That's the low of the 15th of January, right here of last year. And we've managed to reach that hurdle. Now, the big question here is, can we push further north? For now, I'm going to be very, very careful, guys. I mean, this is quite an interesting resistance area. Of course, not to mention the high of the 20th of January, of course, which is around the 59.61 zone. But I'll consider that if we get a nice pop above the 57.40, and we manage to stay above that area. If we don't, then, well, I mean, we could see a bit of a correction here back to the downside. which could be quite a healthy thing here, given the steep kind of up move we already had. So again, of course, let's not kind of overcomplicate our lives here. For now, let's go with the flow here. For now, yes, everything's kind of leaning a little bit still more to the upside because we did not get our reversal signal yet. So that's why be very careful near this 57.40, because if it pushes further above it, then yes, higher levels could be met. However, if it struggles to remain, to stay above this 57.40 zone, then yep, maybe a bit of a corrective move here lower could be possible. Now jumping into Ethereum. So Ethereum took the spotlight last week, and well, I mean, it hit a new all-time high near the 1764 territory, and then reversed back down. Over the weekend, we saw the crypto declining heavily here, even falling back below this 1595 territory I spoke about previously. However, although it fell below it, still it climbed back above this hurdle, and today it's trading still above it. Now, don't get me wrong. I mean, we did get a nice move higher, and it seems that the crypto is still looking quite bullish. But maybe a bit of a corrective move here lower here towards this upside line drawn from the low of the 23rd of December could be possible, because again, we could see a nice decline, a test of this area somewhere here, and then rebound and a push higher, maybe even going for another all-time high. But again, let's not overcomplicate our lives. First, how you could play this one out is basically for now probably stay cautious, and if we see a drop back below the 1595 territory here, then yes, we'll go for some lower areas here, but only up until the 1475 zone or this upside support line. If it continues to trade above this hurdle, above this 1595 zone, then maybe we'll get that push higher earlier. Jumping into AUDJPY, guys. AUDJPY is moving nicely to the upside today. On Friday, we saw this nice explosion here higher, and yep, it kind of reached this hurdle here marked by the highest point of January, and that area is near the 80.93 territory right here. So long story short, we are breaking this barrier today already. Now the big question here is, will we be able to stay above it? Now that's another topic, because again, I mean, if it struggles to stay above it, then well, I mean, we could see that reversal back down, and maybe this could start maybe confirming a possible range here, which could be roughly between the 79.51 zone and the 80.93 level right here, and then yep, we'll take it from there. Again, for now, looking at this picture, of course, at this current moment in time, it is currently trading just fractionally above this upper side of the potential range, or like, should I say, the highest point of January. Then yes, in a way, it's kind of we're leaning a little bit more towards the upside. However, again, let's be very careful. Equities are at their highest points right now, so I mean, if something triggers them to the downside, we could see AUDJPY drifting lower, because as you know, the yen is seen as a safe haven, and investors might start jumping into these safe havens such as the Japanese yen. USDCHF here, it's similar, it's kind of moving in a similar way as the dollar index here, in a way. So yes, it broke this downside line, it remains above this little other short-term upside one, and in a way, kind of everything's kind of leaning a little bit more towards the well, kind of upside, I would say. I mean, at the moment we're seeing a bit of a corrective move here, but again, that could be seen as just as a corrective as long as it trades above these two lines here, the downside one and the upside one. But if it starts breaking the 0.8919 territory somewhere around here, now that's where it could become interesting for the sellers again, and we could start maybe aiming for that 0.8850 50 territory or even below that. So for now, guys, be very careful. Keep your eyes on last week's high near the 0.1946. If that gets broken, then that's where we will get a little bit more excited with the upside. So just to be a little bit more on the safe side. Jumping into GBP Aussie, so the pair is kind of recovering a little bit here. I mean, it's recovering a bit of losses that it made here on Friday. Although, yes, we could see maybe a bit more declines because, I mean, the pair is currently trading below the 100-day EMA here, shown as the green line. Still, this move lower could be classed as a temporary correction because don't forget that we're trading above this upside support line drawn from the low of the 7th of January. So in a way, a curved move here, a curved up move here could be possible. If you are a little bit more on the safe side, what you could do is keep an eye on the high of last week near the 1.8024, and then yes, we could go for some higher levels because such a move here, such a break above this hurdle would confirm a forthcoming higher high. And finally, EURUSD. So the pair reversed higher on Friday. However, it still remains below this downside line drawn from the high of the 7th of January. So that's why, I mean, although everything's kind of well, after Friday everything's looking quite positive, still there is a chance for this one to move lower because, I mean, as you can see yourselves here, we are still below this downside line, below the 21-day EMA, and we're below this hurdle, this 1.2059 zone that I talked about previously. And I said to you guys that for me previously this level was seen as a good area of support, which got broken and kind of opened the door towards lower areas. Now we'll see this area as a resistance, and if we get a break of this downside line and a push higher and a push above the 21-day EMA, then yes, higher levels could be met. So for now, long story short, if you want to aim for some upside here, well, at least wait for a break of this downside line and a push above the 21-day EMA. Otherwise, there is still a chance for this pair to drift lower. So guys, also, yep, keep your eyes on actually on the I wanted to say on the economic calendar, but to be honest, it's a very quiet day in terms of economic data. Mainly all the kind of let's say important economic releases will start from around Wednesday time. You can have a read through those kind of economic projections and just kind of what's coming out. You can check us out, check our website for the weekly outlook, which will be delivered soon, and maybe somewhere in around 1 hour or so. Check out that for more details. But yeah, guys, apart from that, that's kind of it for today. You just kind of, well, for today, I mean, we'll jump into Traders Tea Time later on, but for this session, for the morning session, guys, I hope you enjoyed it. Keep your eyes on the developments surrounding the vaccine, kind of, and all that thing, because again, there are a few hiccups. Biden's new policies, that's something to watch out for. So basically, we'll just keep an eye on the whole economic sentiment, overall how it's doing, and yeah, this is what could drive the market today. So yep, guys, I hope you have a fantastic trading day today. Stay safe. Join my video later on, my Traders Tea Time, 13:30 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.